Hi there, I'm Giovanna Lever and I'm joined by Lisa Milletta of Bacchus Associates.
Hi everybody.
Lisa is our long-term accountant for Sparrowley Group. Before Sparrowley Group, she was also our personal accountant as well for our family affairs and has been instrumental in working with us in terms of making sure that we're maximising our opportunities and that we have a profitable business at Sparrowley Group, and she's certainly been instrumental as part of our slow and steady scaling over the last 3 years. One topic I want to talk about today is around superannuation, lack thereof, and future-proofing for your life and in business. Over the last 3 years of business, I've been able to pay myself the maximum amount of superannuation, and that's been a choice that I've made where I've foregone some of my salary to put that maximum amount in. The last financial year it was $25,000.
Correct, and it's now at that level.
Yeah, great. But over the last 3 years, I've paid myself $85,000 in superannuation, and there is a strategic reason for this. Lisa.
What people don't realise is putting money into super is putting money into your future. So you'll have to think about this. Once you put it aside, it's like locking it into a term deposit for a very long time. You can't go back in and say, oh, I want that money again, and I take it. But by doing that, you are securing, and especially starting it at a younger age, you're securing growth within super for a longer period of time. Now, on the 1st of July 2017, a lot of changes came about super, and a lot of it was spoken at such a high level that a lot of everyday people didn't know.
Go straight over your head.
So the simple things are, everybody now can contribute to super, whether you're an employee or you're a business owner, and you can claim a tax deduction. However, you need to be aware that if you're going to do it, you're not going to be able to touch your money again for a fairly long time based on your age, and there is paperwork to go around that contribution. So what you need to do is, if you want to do that, I would always say for everyone to seek a financial advisor and make sure they make a sound decision, but also call up your super fund and make sure you fill in the right paperwork. So the last thing you want to do is put some money in and then realise you're not going to get the right tax advantage for it.
So let's just on that and that tax advantage, one of the key reasons, as well as future-proofing our life, is also to make sure that I can optimise the tax advantage within my business.
Correct.
Yes, so what you want to do is make sure that you don't leave it too late. So I've had some instances where people have left paying their contribution too late, and they've rung their superannuation fund on the 26th or 27th of June, and it's just too late for processing. So you really need to plan this out as part of your forecasting and your financial modelling. Now that sounds all very intense and it sounds
Correct.
complicated, but it's not. It's just about putting some figures around and maybe putting a little bit away every month, so that when you get to the end of May and you're starting to prep for end of June, end of financial year, that you have that money in the bank, because there is great financial or tax benefits from that. It doesn't have to be the full 25,000, but something is better than nothing, if not for the tax advantage and benefits, but for future-proofing yourself. And I was saying to Lisa earlier, I've had so many women, particularly women in business, who have come and spoken to me for mentoring, where they aren't paying themselves any super, and some women who are ready for retirement, but they're not able to slow down because they have no fallback option. And that if we're really looking at the future and future generations, how can we arm those men and women with the right information? In my personal experience, and this is one because I'm privileged to be in the accounting industry and I know the rules, when I was on maternity leave, my income was significantly lower. And the unfortunate thing is, it is usually the woman that will stay home and take care of their children. So we will usually tend to have a lower superannuation fund balance. But the one thing I did remember is, at the time, and it still is valid, just the returns are less, is the government, if we earn under a certain level, and it's about $37,600, if you earn under that and you contribute to super, the government will actually give you a co-contribution, which great.
is a free handout of $500, or it's up to $500, just based on the amount you contribute.
Yeah.
So it's always something good to look at. So in the year I had my children, there wasn't a lot of leftover money, but I remember I put in I think I put in about $1,000 and I was lucky enough to get the $500 back. So from a $1,000 investment, I actually walked away with $1,500. That's been locked away now in my super, and I've made earnings on that every year.
Yeah, perfect. So we're going to be running a series of episodes around future-proofing yourself. Today we started by talking about superannuation, and we're going to cover a whole bunch of topics, and I'll be joined by specialists here, so like Lisa. But if you have a particular topic that you would like us to cover, just email me at giovanna@sparrowlee.com. So that's sparrow with an L-Y.com. Thanks so much.
Thanks,
Lisa.
No worries, thanks.